All right, time now for top picks. They're going to sound a little familiar to the middle of the show. Bank of America. You liked it then, you like it now.
Okay. Here's what I want to do. When you're in a strong market and you have leadership, clear leadership, there's no reason to jump from one boxcar to another. Okay? If the things that are causing the structural change are continuing to strengthen, then that's a good reason to stay in positions. So there's a lot of things we could talk about here. We're going to talk about Bank of America today because there's 4 key things that are going to move Bank of America higher over time. 1, rising interest rates. Rising interest rates are a reality. It's become more of a reality this year, and it's going to go on for a long time. Deregulation. Deregulation is happening. It doesn't take legislation. That is helping. Cost cutting. They've cut $10 billion of expenses, from $63 billion to $53 billion since 2010. That has a long way to go. Economic growth is accelerating, which helps grow business. And the ability to return capital to their shareholders, they raised their dividends 60% last year. Again, that's going to increase again this year. So the financials can be revalued, the multiples can expand, the earnings can get better, I think, for 5 to 7 years. There will be corrections. But Bank of America is a leader. It's the second biggest bank in the U.S., and this could go on for a very long time.
All right, the next one is Microsoft, also a past pick.
So staying on the same theme, the cloud theme that Microsoft embarked on is accelerating. Azure, which is their cloud business, grew in the most recent quarter 90%. Okay, it's a $20 billion business today in a $200 billion market that's growing. So they have the enterprise customers. They've shown they can get them, but they invested up front for the infrastructure, and the margins get better. Their margins went up by 8% in the quarter. Software as a service, subscription software, is growing very, very nicely. And so these businesses will grow for a long period of time, whether or not the economy grows, right? These are structural themes that will go on for a long time, and it's an inexpensive stock.
All right, less than a minute left in the show. We don't want to break the theme. Dow DuPont. Okay. That was a past pick, and you still...
I'm going to stay here. Again, very clear theme in industrials. The scenario is playing out. The merger is complete. They're working towards spinning out these 3 different businesses. The economy continues to get better, so pricing is good. Their feedstock costs are low. And again, dividend will grow. In the 1950s, as rates went up, people moved from bonds to companies with dividends that would grow in a stronger economy, and it went on for 16 years. Okay, this can go on a long time. These companies have yields like Treasury bonds, but they're growing them at 10 to 20%, which you're not going to get in a Treasury bond.
Dividend growers. All right, David, always fascinating having you here. Learn a lot.
Thanks for having me, Greg.
As always, at home, please consult a qualified financial advisor before you make any investment decisions. Thank you for joining us. Hope to have you with us here tomorrow at BNN.